Welcome back. Wanted to do a quick weekend update before the week started. So let's get started, right? So on CPI, what happened was the print came in lesser than expected, and we pretty much rallied off support right to the top of this flat, right? You can clearly see this blue trend line that I have marked here has acted as resistance in the past, and so far we're kind of just hovering near the trend line at the moment. So I wanted to go over a bunch of scenarios and kind of explain what I'm kind of seeing in the broader markets, right? Number one is, so this is one scenario I am watching, and this is, again, my reasoning to watch this compared to the other one that I'm going to show you is the dollar, right? If you've been, watching the Zoom sessions in Discord, we've seen that we've discussed how this 108 area was really, really important. And if it was to break 108, right? If the market was to break 108, then the next obvious level of support is below like 104.5, right? Which would indicate more upside coming in the future, right? So that is primarily why I'm watching this scenario, is that I'm looking to see if the brief pullback, right? We pull back and we kind of hold about the 3920 area. And if it does, then I think we could have a move up to the top of that channel, right? And on the cash index, right? Cash index, we know that it does have a gap to fill, right? It does have a gap to fill up here. So that would kind of align with that ending wave 5, right? Again, the reason for that is the dollar, right? The dollar breaking below this 108 area could mean, imply more downside, right? The next strong level of support is at 104, right? So it's kind of the main reason why I am watching that primarily, right? Second scenario, as I've mentioned, this is in a bear flag, right? And something to note is the dollar, the minimum target for the dollar was the 1.23 fib, and the next strong target is the 1.618, which we also know, right, is the golden ratio. So we have, it has kind of finished the minimum that it needs to do, right? And it doesn't have to, right? Though the reason for this is a trend line support and a moving average at this level, but that doesn't mean that the dollar can't arbitrarily bounce off of this. This can definitely do that, given that, again, this is a bear flag, right? So this area could very well hold as resistance, right? And cause a downward spiral move, right? Again, would be dependent on the dollar, holding this low that it made, right? At 106.4, right? If that low holds, then I can certainly, see this bear flag acting as massive resistance before it comes back down. But yeah, I am still watching this area, right? If I go to this chart, you can see this is previously the area acting as resistance. You can see in the past, right, we've pulled back to this 3,900 area before rallying higher. So that would kind of be the make or break level, right? We break 3,900, then I would more likely watch this bear flag, kind of play out down to 3,400. So that would kind of be the broader reasoning behind this kind of bear chart that I am also looking at. And the last scenario is actually the most bullish out of the rest of the indexes. And again, the reason for that is something to note is if I go to the chart of Dow, right? If I go to the chart of Dow, you'll be able to see that if I fib this, right? If I fib this, you can see the Dow exactly bounced off the 1.23 fib, which could, again, though I have this as an ABC, like this would be a WXY, right? An ABC in a WXY. I also can't rule out the fact that this entire move, right? This could have been my A wave. This B wave is your expanded flat, with the C wave probably going up to test 354, right? Before it finishes off this X wave when we come down for the Y wave. So that is something I am watching, right? I can't say that it's not possible. So that given that the Dow could, again, this ABC is still valid, right? But you would need a rejection pretty fast, right? We're right against the 0.382, which is the inverse 618. So you would need a very hard rejection this week on the Dow to make this an ABC pattern, right? Not ruled out, but it's starting to look more like an ABC. Like even if we go to the banks, right? You will have noticed that this entire move, right, was again your A, your B, your C. So the banks have definitely put in an ABC. So it will be interesting to see bigger picture, if we're actually playing out this ABC wave, right? And again, this would be bullish like in the short term, but it's not actually bullish, right? It would, again, it does have any pullback, right? It does have another 8 to 9% of upside if we are in an ABC. But again, like I said, it will reject and we will have this C wave move down before it would be a reasonable, kind of dip to buy. But yeah, obviously short term, we can definitely trade it up. So this is something I'm watching as well. So those are kind of the three scenarios that I am monitoring, right? I'm watching to see if this 3900 level holds. If it does, right, the first area of interest for me would be this. Again, what is this trend line? This trend line has just acting as the main resistance point for a sell-off. So that's why this kind of the gap fill on cash markets. So if 3900 holds, that would be my primary area of interest, right? And if we do get to that level, I will be watching to see if we break this trend line, right? If you start to break this trend line, then it's very likely we go retest around, 340, 350, 4450, right? That would be the primary area of interest. But first, before we do all of that, the market would kind of need to, find support here. A break of this level with 3900 level would most definitely, sell it lower. And again, importance to keep an eye on kind of the dollar, right? As I've mentioned, this 104 area would be very interesting. Again, this is the first fib level that, the dollar bears need to break, right? If they can't break that, then I would be very keenly watching this. However, if the dollar bears, right, do break that, this 104 area, which I mentioned in the past is trend line support, right, would be a very interesting level to see if it gets bought up, right? It's kind of one of the main reasons that I'm not too keen on this is how, kind of how the market will react with the dollar at this level, right? It's also where the previous wave 4 ended, so it would be a pretty, confluent zone for a strong bounce of the dollar, right? But if this 104, right, 104.5-ish area breaks, then that would be pretty bullish for equity markets and we could have a more sizable rally. So yeah, kind of corresponded with the dollar and kind of see where the broader markets are going, right? And the wicks also, I mean, I don't really care for the wicks. I feel like the dollar is more important, but it is interesting to note that this actually ended up, right? Remember, we were kind of looking for a fake breakout and actually I thought it would kind of consolidate and move higher after fake breaking out, but it actually turned out to be a legit fake breakout. So again, the wicks is kind of interesting because again, it's come down into a key trend line area of support. So it will be interesting to see how it reacts there, right? And also the 10-year, this is again the channel, right? If I go to the daily chart, this was the channel that we've been looking for a reaction, and that proved to be, kind of the top in the past 3-4 weeks. So it will be interesting to see, right? I would say 3.7 is kind of the line in the sand, 3.7, 3.65 for this wave 5 count. If it starts to break below that, then we should easily be able to sell the 3.2%. So yeah, this is kind of also something I'm kind of watching on the 10-year, right? So with that being said, right, let's kind of look at this week's watch list, right? The first one I have is Target. Again, the reason for that is we know that it has a giant gap to fill, right? And we also know that it's broken this downward flag. So yeah, I mean, I feel like Target, if it can break this resistance level at 174, should be able to test 183 and, 185, 190 easily. So it does have a gap to fill, so that's the reason I have Target calls on this week's watch list, right? And the alternate is, right, if Target fails to break over this 175 level above, then Target can very likely, I'd say if it breaks below 160, then it's very likely going to come down to 136. So they're kind of your bull and bear versions on Target. The next one I have is FCX. And again, the reason for that is this ABC wave, right? You can see that this majority of this ABC wave seems to be played out, right? At the most, probably, pushes up to, 41. But I think FCX, even if I was bullish, right, on FCX, like if this is my 1-2, I would still look for a wave 4. Bull or bear, I think it kind of pull back to 35 before it has the fifth wave higher. So it's kind of what I have for FCX, right? I'm looking for a small pullback to this 35 zone before it comes down for that C wave. The next one I have is CELH. The reason for that is again, very constricted selling, right? Which means that WXY, right? Which means that this could just as easily be a wave 4. And again, we are kind of sideways in this channel. So if I think this would be a very good, entry point, break above 94 or 95, right? You break this sideways consolidation. You're also kind of breaking this downtrend, right? It's already broken the downtrend. Something to note is broken the downtrend in the sideways channel. So over this level, right, it should be able to make a pretty sizable move. So that's the reason I have CELH called on here. Is this interesting chart, right? And again, a break below 82 would be the downside trigger for CELH. The next one I have is CRM. Again, this is a very, downward trending channel. Again, I would need for this to, break over this level to kind of break out, right? So this level up here, you can see this is the channel holding as a downtrend. So I would say a safer entry would be a break of 165, and then it should be able to, test 175, 180 very easily on CRM. But yeah, the trend line will kind of break around 161. So that's a more, I'd say, a risky entry, right? A confirmed entry would be a break of 165. But yeah, CRM looks interesting, right? If the market were to continue higher in a Thanksgiving holiday, then CRM would be one of the stocks I'd be watching to press higher. And the next one is CCJ. I've brought this up in the past, right? Just to keep an eye on this distribution. And you can kind of see we're still kind of stuck in that sideways channel, right? So at some point, CCJ is going to break this head and shoulders pattern and come back to the downside. So yeah, just keep an eye on this, right? I would say 20.25 would be the ultimate break, for a move down to 15. So yeah, just another reminder. I just wanted to bring this back in on your watch list. So thank you so much, guys. Have a great week.